Well, usually when you work as a CFO, you have a lot of responsibilities and not too much benefits here. Usually you are the chief F-word officer. As a matter of fact, I like the CFO who is interested first in cash flow and then in your results. Because if you're generating cash, you're making a profitable business. If you're not generating cash, you might be having some problems there, translating these margins and EBITDA in cash. Without cash, no shareholders value.
Hello and welcome to Brazil is Not for Beginners. Today I have a special guest, my dear friend Frank Wundheiler. Frank is a corporate CFO and offers CFO as a services here in Brazil. He's worked with multinational companies, domestic companies at all stages of growth across a number of industries: telecom, restaurant, agriculture, technology, you name it, Frank has done it. And Frank, I'm really excited to have you on to talk to me about what it is to be a CFO and to talk about corporate finance here in Brazil. Thank you so much for joining me.
Yeah, thank you. I appreciate your invitation here. So I have great responsibility here to talk about this subject for investors or something like this, right? By the way, I also work in media and retail to give this broad range of industry segments that I worked before.
Yeah, well, what is it that Spider-Man says? With great abilities comes great responsibilities, something like that. So I think you're the corporate finance hero here. And so you can teach us a little bit about it.
Well, usually when we work as a CFO, you have a lot of responsibilities and not too much benefits here. Usually you are the chief F-word officer.
I've heard some of the other C businesses also referred to in not the most positive ways, but I think that has to do with the seat that you sit in. But I'm really happy that you're joining me and really just looking to be frank with you.
Yeah, you're going to be frank with Frank, but that's a bad joke. So let's move on.
Yes. So, Frank, I mentioned at the top that you have worked in a number of different industries and across a number of different stages of companies doing growth, early stage, publicly listed, corporate restructuring, all of these different things. Some of those words may not even mean very much to the people listening, so I want to unpack what those mean as well. But can you first introduce yourself and talk a little bit about your background?
Yeah, I've been working in finance for over 25 years now. I graduated in economics and I did an MBA in finance. I'm originally from Rio de Janeiro, and I started my career in financial markets that at the point in time was settling in Rio. Then I moved to Sao Paulo and started to work for corporations. I was happy to have the opportunity to start working in a very large startup that was the first cable TV business in the country and also in Latin America too. It started small, and when I left there 8 years later, was the largest cable TV network in Brazil. I spent different phases in that business, from the fast growth of the business, the first issue of Yankee bonds there, then later public listed company overseas in the New York Stock Exchange, NASDAQ. And then later we had the restructuring of the company and the debt, later the sell to another major operator in Latin America for telecom business here.
The full roller coaster.
Yeah, exactly. And after that, I worked for, satellite companies or media distribution companies in different stages of business there, also for spin-off of large IT companies, and then for broadcasting, agriculture, and later in the retail space, which is not usual to have this sort of experience. Usually tend to operate more in two or three business segments. I have a long career, and I started with the financial markets, capital markets. I didn't like to work there that much. Maybe I would have made more money in my life if I stayed there, but I wanted to work in the main street. I was not the guy tailored for the Wall Street. I did a good job there, but I wanted to see the real thing. Buying and selling money is interesting, but seeing the real economy, it's totally different thing. When we talk about real economy, as long as you have the opportunity to work with multiple segments, you're gonna satisfy yourself. You see the product being created, the product being delivered. It doesn't matter if it's a service or it's a product, but you participate for the entire call to cash process. That is the main thing for a CFO. I'm not a traditional CFO that operates behind the desk, sitting in a comfortable chair and just looking for results or something like this. pressure the iris and doesn't interact too much. This is not myself.
I mean, you do like a comfortable chair. I have been to your house.
Yeah, I have my Herman Miller's sophisticated chairs.
Yeah. No, but I think I understand the point that you're making, and I think that's a really great transition because I want to ask you if you can you help us demystify the role of a CFO? So you said the chief F word officer. I think that there's a
Yeah,
number of different things that that F can be. Finance being one of them, but not the only one. Some other F words that we can look in there. But what is the role of a CFO? What are the goals? How do those translate into daily activities? And then can you expound a little bit on your vision as well of what a CFO is really responsible for? Because I think we have this image of the guy sitting in the comfortable chair, looking at numbers, looking at spreadsheets, and pointing and saying, up this percentage, reduce that. And so help us demystify that a little bit.
yeah, that's correct. So, what I think is the right profile for a CFO, and it's not everybody that has this profile, and it's not about being right or wrong. It's just that you can have it or you cannot have it. But I think that all the corporations they need this sort of profile sooner or later if they want to raise the bar to go to a next level. A CFO usually you have to act in three layers. Okay, the basic layer is about managing the performance of the business, managing the results, interacting with your peers, operational, marketing, sales, support, administrations, logistics, and stuff. But you're focusing more on the short term issues and feeling the beat of the business there. And also, running cash flow here. As a matter of fact, I like the CFO who is interested first in cash flow and then in the results. Because if you're generating cash, you're making a profitable business. If you're not generating cash, you might be having some problems there, translating these margins and EBITDA in cash. Without cash, no shareholders value or no shareholders return. The second layer, you have to be careful and you need to execute all the times in all CFO roles, is the transformation of operations and compliance. Operational transformations, it's more bureaucratic, it's more boring, but it's something really important for you to do, particularly if you need to look back to the layer number one, performance management and stuff. If you don't know the processes, if you don't work in this process all the time, if you're not upgrading them, you're going to have problems sooner or later there in the performance. So you need to constantly review the code to cash or whatever is the name that you're going to give to this process flow and work every single piece of them with the other areas, trying to make them seamless and perfectly integrated into a finance matrix. The other one that is compliance and governance. There's a lot of talk about this, and it's not different compliance and governance from what it was 10 years, 20 years ago, 30 years ago in terms of requirement. So you always need to do this. People like to talk about stocks, ESG, and all the stuff, and using the trending terms. At the end of the day, it's too much trending terms and too much little action or too much, cover ups. That you see all over the place from large companies to small companies. So the CFO needs to get a customer to work with this, and he needs to do this. And the last layer is the where you're gonna work with a strategy. You need to be a strategic type of guy, and you need to work with the shareholders, with communications with them. You're gonna work with the banks, with investor relations, and this company. So it's more like a role that you take from the door of the company to outside of the company, except for the shareholders, right? And the other first two roles you work inside the company. So what is important? If you want to have a good CFO that's going to add value to your business, you need to have a guy that operates in these three layers. Particularly when you go to multinational type of companies, their role is going to be more restricted to the first and second layer. When you work for domestic companies, then you have the three layers, right? But you also need to think that depending on the state of the business, you're going to require more the third layer, the second layer. If the guy comes from a controlling environment, he's going to tend to focus prior on the second layer, then on the first layer. So, depending on the background of the person, of the CFO, and the companies that he pass, he's going to be able to navigate in one or two or three layers comfortably. I'm comfortable to work on the 3 layers. I don't have one that is particular. Oh, this is my favorite one. Some people like the third one because the third one is like investor relation, talking to the bank. So you're gonna have great lunch. You're gonna travel business. Lena Rubinstein circuit for ambassadors and stuff, London, New
Right.
York. But just a piece of your job.
Yeah, I imagine as well that it comes in phases, right? Where you get the controls in place and then you can focus more on cash flow, or you're focused on cash flow first to get the business to a certain point where then you can work on improving controls. You might be raising money, you might be restructuring. So you've worked across different companies in different sectors at different stages. And so I think it's really interesting to hear your perspective on the three different levels and how those come together and how you need to navigate. Is there anything unique about the concerns that a CFO in Brazil faces? So I imagine what you've talked about is a little bit more general, a little bit more concerned with a CFO that might be in any market. Everybody should be able to operate in these ways. But are there things that a CFO in Brazil in particular should be more concerned with or needs to pay attention to? So things related to the tax regimes that are quite unique in Brazil, the different capital market structure. When you think about a domestic company versus a multinational company, or somebody that's maybe domestic but doing import export versus somebody that's really focused on the internal market, how do you think about that in terms of Brazil as a unique place for CFOs? And I imagine there's probably quite traditional CFOs and maybe newer CFOs.
Well, this is not a question, right? This is a questionnaire because you asked me seven, 10 different questions in one single one.
Well, Brazil is not for beginners, right? I think that's the point.
Yeah, well, let's kind of demystify a little bit this sentence that I think this is the first one. That's your podcast name, but I don't think this is entirely true. Brazil is not for beginners. Brazil is a developed country. You cannot say that Brazil is a poor country anymore, right? A country that has such large companies like Vale do Rio Doce, JBS, Embraer, you have leaders in their segments and global leader, very strong. Then you have the agriculture at the size that we have, representing 60%, 70% of markets, fighting inch by inch with American agricultural companies and other stuff. So this is a complex country at the end of the day. You do have a lot of problems with disparity of income, which is more unique to the country than when you compare to other countries. Of course, more developed countries here. I think we are at the end of the list of something that is transitioning for the underdevelopment to a developed country here. But income is a challenge for any business here.
I would say that the name of the podcast was just too easy and too available. But the point of it is to highlight the development of the country. And so that's one of the reasons I want to talk to you. And I am interested in these unique concerns because, to your point, Brazil is one of the 10 biggest economies. The companies here are massive. The wealth that's generated is
Yeah.
massive. There are companies that operate that are world class, and there's also companies that are not. And I think that you can say that in any market. But what are the unique attributes that a CFO in Brazil needs to have? One of the things you and I have talked about, and I think I have questions about it later, but the interest rates here are unique compared to other places. So what are these concerns that a Brazilian CFO needs?
Yeah, let's go to this micro environment here. We've been talking from the macro perspective. Let's go a little bit to the micro. When you're talking about tax structure, in Brazil, tax structure is more complex. Definitely. This is not a VAT driven company like you have in Europe or US and certain countries in Latin America. A non VAT tax economy is always different, is always difficult for you to operate.
Can I just ask for people that don't know, VAT is value added tax? I didn't mean to cut you off, but please go ahead.
That's okay. So you don't have a value-added tax economy here, which is simple for you to calculate taxes for the consumer, for the companies that are doing business to business transactions or business to consumers transactions. So when you have this sort of company, like I think India is a little bit like this, that is not a VAT driven country there. It's more complicated here because it's not every single tax that you can pay and take for credit to pay other taxes here. Credits does not apply to certain debt of taxes here. And you have rules different from every single state. You have rules different for products and services. So a lot of foreign companies, when they come to Brazil and they see this stuff, they get confused and afraid, oh, this is too much complication here and some of the rules doesn't make sense at all from a foreign perspective. And even for a Brazilian perspective, we know that it doesn't make sense. At the end of the day, you have a large public deficit here. So each state, each city authority or the federal authority, they need to collect taxes. They need to raise money that they can get from the taxes here because they need to pay a large debt. So every single day they push the rates up or down or adjust the level of credits they can take it or not. If you get this into your mind when you're doing business here, you're gonna say, well, that's the price of doing business here in Brazil. Oh, it's complicated. Yeah, but it's not the end of the world, right? Of course, if you're looking for a CFO, you're going to need to have a better structure in the tax department in your company for sure. You're going to need to have more support from external companies like companies that do tax accounting or they provide services as systems or anything like this or tax audit systems like Thomson Reuters or other companies like this. You're going to need to rely on them. You're going to need to rely on certain ADP companies who do payroll processing, that they understand about the taxes on the payroll stuff. But the other side of the business, honestly, a lot of CEOs that I worked before, they don't like this. They don't see this, but it's not different from any other country around. Doing business in Brazil, as you need to expand retail and other operations there that you rely on consumers or businesses. You talk about disposable income. This is not different from operating in China or in India or in Africa or the rest of Latin America. So you're not unique because of this. Operating with credit is difficult, of course. You have high interest rates because you have large public deficits and you have inflation. But let's do a sort of benchmark here. Go to Turkey. They have high inflation, high interest rate, inequality, all this stuff.
Yeah.
Go to other places. You have investors in any type of economy there. That's what I like to demystify. It's not the end of the world. It's not totally unique. It's not that difficult for you to come here, and doing your business here, as people say that it is.
So you talked a little bit about one is credit and the other is inflation. Can you talk a little bit about the uniqueness of those in Brazil and understanding, like you said, that there's other countries with high inflation, expensive credit? Can you talk a little bit maybe about the capital markets? How does this work? And one of the other things that we've talked about in the past is dealing with volatility, right? So Brazil is volatile. Like you say, rates move up and down, things change quickly. So can you talk about those aspects?
This is a great question, and this is in fact a big difference here. Brazilian capital markets became very big over the last 20 years, 25 years. And they are extremely liquid type of markets. When you compare liquidity in a market like Brazil to liquidity in Chile or in Colombia, in Mexico, or in a lot of other foreign countries, you're going to see the liquidity is huge in Brazil, particularly because you have a large economy here. You have larger exports, right, for agriculture and other stuff. It's not that Brazil is a big player in international commerce, but it's a big side of operation and liquidity here. And because of the interest rate, of course, you have a lot of fixed income transactions in the capital market. And also because of the sort of volatile currency here, you have a lot of FX transactions here. So easily you have a big volatility when you have some movements on the interest rates or in the foreign exchange. A foreign exchange movement or interest rate movement can be caused by any large movements in Europe or US or even medium-sized movements there. So when this happens in Brazil, you trigger all this liquidity here. A lot of people start trading positions here and you create the volatility. This is tricky for a business because if you are sitting in the chair of a CFO running a debt that is a floating rate type of debt, you're going to need to adjust quickly for a business there. If you have more fixed rate type of loans and stuff, you do have your problems there. You can make money at one time, but later, along the following years, you can have a very expensive debt because of this volatility that you have. So this is the difficult part that makes a CFO here more sharp and need to be a more high performance type of guy to accommodate these needs of a company when they face these things in the market. Are we the only ones around the world that do this? I think that just a couple of countries have CFOs with that sort of profile, either because they live with inflation, either because they live with FX devaluations all the time. But the magnitude and the scale that they have in Brazil, it's like you're going to the gym 3 times a day.
It's a workout.
Yeah, it's a workout. It's not different from these movies that you see the Navy SEALs that jump from the helicopters, puts on the ground, firing bullets from everywhere. The guy look at the camera and see one other day.
Yeah. So you mentioned there as well the currency aspect. Can you talk a little bit about how you manage that and how you think about that? Because I mean, even just this year, the currency has been going up and down, a solid 10%. So how do you deal with that, especially when you think about it from, a lot of companies have exposure. Either they're importing, they're exporting, they're part of a multinational, they're part of a group. So how do you think about that currency exposure?
I had the benefit to work in different type of companies, right?
Yes.
Brazilian and multinationals. The perspective of doing hedge or protection are different between the two of them, right? Foreign companies, they are more conservatives in terms of hedge. The majority of them does this overseas, but they don't comprehend too much about the risks that are really involved, except when you're talking about a large multinational company. And some of them, of course, Brazil doesn't represent too much of the business. So you're at the end of the tail. So they said, well, this is only 1% of my business. Let it be. If I lose money, I lose money there, but it's only 1%, half percent of my business. When you have a company that is 15%, 20% of your business, you need to be more careful. When I look about domestic companies, then you have companies that are conservative, and you have companies that have a good strategy for this. And then you have companies that speculate, which is not good, right? I worked in agricultural companies before, and I can tell you that usually the agricultural companies, mining companies, agricultural companies, and similar companies like this, commodity companies, they are more accustomed to do the hedges and the thing, and they usually have very good strategies to do their business there. They don't rely too much on the results on this stuff, right? So since you have the liquidity, you have the instruments to operate the foreign currencies here and do your hedges here. The problem is more like about the cost of the hedge because of the interest rates that you have than volatility itself. Because sometimes you see the volatility 10, 5%, but when you're going to see the cost of the hedge, then you're going to see, wow, I'm going to have to work here with a 5, 10% volatility, and now I'm going to operate with a 15% interest rate environment here that can go to 12 or go to 18, and I have an investor whose weighted average cost of capital, it's different from here because he looks from an international perspective and I'm looking for a domestic perspective. So the risk premium of the country is different. So we have a lot of things that make this part of the equation of being a CFO or an investor, a company investor in Brazil, to be comfortable and easy to handle this. Of course, weighted average cost of capital is going to impact the decision of investment here or in any other country. Volatility and liquidity, it's more like something related to Brazil, right? And of course, inflation, because we do have one of the top 10 inflations all over the world.
Yeah, but also the one of the highest real interest rates, right? So I think that they kind of come together. So, I mean, that's your fun, right? That's your fun as a CFO. That's why you're going to the gym 3 times a day, right?
Yeah, and that's what's create a lack of understanding from foreign entrepreneurs in Brazil, foreign investors, and even for any other person that works here, because you get messed with nominal interest rates and real interest rates, right? You can have a Selic at 15%, but you have an inflation at 4%. So you're talking about a real interest rate around 10%, 11%, right?
Yeah.
As you go to US, you're talking about 4% and a 3% inflation, so 1%, right? So assuming that you have the ability to pass to your prices, the inflation, you need to pay attention on the real interest rates when it goes down or when it goes up. If you look historically to the trend in Brazil, the lowest real interest rate that it had in Brazil was in average 4%, 5%. The highest was around 8 to 10%, depending on the time there. Most of the time, you're trading around 5 to 6%. If you look back, to Bloomberg or any sort of thing like this, you're gonna check. Of course, I'm not the guru of these things here, but I give you, highball numbers here, and it's pretty much what it is. So that's what it make a difference here. That you need again to operate in this volatility here, real interest rate, which it matters more to you than the other ones there. And of course, when you're talking about this and going back to the taxes, as opposed to other countries where you have 25%, 20% corporate taxes, sometimes even less, 15%. In Brazil, we have a 34% corporate taxes. So if you're paying 50% there in interest rate, you get a 34% deduction in this interest rate there, right? So the cost of this debt is a little bit different because of this big range of magnitude of numbers, and comparing to the numbers that you have overseas, this create a lot of shock and fears to the foreign people when they come to Brazil.
So I want to touch on that in just a second. But one of the other things that you mentioned and we brought up a couple times is you've worked across a number of different sectors, right, in the
Yeah.
economy, whether it was IT or media, mining, consumer goods. So can you talk a little bit about how your role as a CFO differs in these settings? Kind of what is different about these different types of verticals and what is the same in terms of your role? And maybe use it also to share a little bit about the uniqueness of those sectors in Brazil. Sorry again for the complicated questions.
No, no, that's okay. I can push the exit button at any time here.
Yes.
It's like I said in the beginning here, we have these three layers that you're going to need to operate, right?
Yeah.
And depend on the company, if you are in a foreign company or if you're a local company, you're going to exercise the three layers or you're going to exercise only the first two layers the majority of the time there. So your role need to be always an expanded role when you're talking about local companies here, because you have to go to the three layers that I mentioned before. Remember, performance management and cash management. The second layer, operational transformations and governance. Third layer, communicating with shareholders and investor relations and such. When you work in long-term capital needs, you definitely need to be a good CFO on the layer three and also to the layer one there, right? When you are in a more intensive capital type of business, you have to look more layer three because you need to prepare a roadmap there. So you need to align all the expectation from your first 5 years or 10-year business plan there.
And this is more like agriculture, right? So something you're planting, you're going to take a while to collect.
Yeah, whenever you have this infrastructure type of business or large commodity type of business, you need to be more close to these two things here because the layer number one is you have to make sure that you're making cash because you need to pay the service debt for the long term. You need to survive. And sometimes, your capital equation here you need to adjust. You're going to need to go back to the shareholders. You need to bring a strategic investors or something like this to accommodate this plan that you have, or you need to trade debt, or you need to do other things. You need to go to the market. You need to present your plan to raise more money there. It's a different role for a CFO. When you look to a more tech company or one more, short-term business to business or business to consumer company, it's different because you're operating more on the layers one and layers two. It's all about performance management and cash flow there and operational transformation because you're going to find money within the gaps there. And of course, compliance and other stuff because you want to avoid frauds at any cost because it's going to cost you money there. And frauds exist in any business there. And then when you're talking about taxes too, you're talking more about the layer one and the layer two that you're going to have opportunities there. You have a CFO sometimes that is very good on these first two layers there. But if you have this type of companies, but they also public listed, then they need a more complete CFO with the three layers there.
Yeah, that makes sense.
Private business make more sense to have a first and two layers. Public business, the first three layers. The focus on the retail, media type of business, even tech, business to business or business to consumer, focus on more short term. You're gonna need someone in the first or second two layers there. When I talk about multinational companies, you have a little bit of a twist there because of the complexity. Sometimes most of these multinational businesses are pretty much sales division that you have here in the country. They don't produce, they import and sell a lot of stuff here, particularly tech companies that is software and other stuff. So you're going to be working much more in short-term performance, not even too much in cash, because usually they're well capitalized. They don't raise money in local markets here. So you don't tend to have liquidity problems there. And you're going to work a lot in compliance because your parent company, that is a public listed company, is always worried about this. So they have to file different reports and every stuff. So people want to hedge in all sort of ways their names and their backs there. So they ask you to do several tests to scrutinize travel expenses and all sort of things like this. That's pretty much boring for a finance team to do.
So your last comment there actually hit on my next question when you said a finance team. So obviously you're a CFO, you don't do it all on your own. You're not an army of one in most of these companies. And I know we've talked a lot about how important it is for you to build strong teams. So can you talk about building finance teams here in Brazil? What are the keys to building and managing a strong finance team here? What do you look for in people? What advice do you have for people building finance teams and frankly non-finance teams here in Brazil?
Yeah, well, when you look to a traditional finance organization, you usually have four pillars, right? You have the treasury team, you have the tax team, you have the controller team, and you have the FP&A team, right? So you have these four pillars there. You can have companies that you have two pillars, that is the controller and the FP&A team, and also with the tax team together, and you have treasuries separate. But usually, my preferred type of structure is when you have the four pillars separated, or when you have at least two pillars like treasury and FP&A together and tax and controlling together. Why I'm telling you this? Because you have this complex tax environment here in Brazil. So I think that is always best for you to have the controller and the tax guys together or pretty much close in the organization so they can focus on the tax because doing tax accounting it's also difficult and complex here. The credits that you're going to recognize or not, if you have contingency assets or just tax contingencies on the other side, stuff like this, that is sort of complicated for you to have. And because of the liquidity and the volatility that we have in the markets, I suggest always for you to have Treasury and FP&A together because FP&A is a constant exercise. It's not that you're going to do the plan, one time per year. You're going to do, quarterly reviews or things like this. You have to do this on a monthly basis. Some segments you have to do on a weekly basis. If you go to retail, business, consumer, it's almost on a weekly basis that you're redoing your plan, your forecast, and stuff like this. If you're talking about IT company or sales, business to business, you're doing this pretty much as a monthly basis there because you have the funnel of your sales and all the stuff. So you have to prepare. Agricultural company, they have a different cycle. Of course, you have two harvests per year because you spend money during these two cycles to prepare the field, the next crop there. You have bleeding in your cash positions there that you have to protect, and stuff like this. So it's always good for you to have this other side. The more important thing is that you do not hire a robot or something like this for these boxes. You write human beings here.
Yeah.
In order to be a good leader in finance, you have to think that that's my opinion, all right? Or a good leader in any type of department or organization. It's not about the organogram that you got in the back. This is something static. This for someone to see when they go in the company, how this company is structured there.
Right.
I don't want to be called the CFO, the vice president of this. This is all names. People are gonna understand and respect you when you are the guy that they know that's gonna fix their problems, that know what to do, they know what to give in guidance, they know how to manage the things there. And for doing this, you can be an analyst, you can be an intern, you can be a CFO, a director. So you need first to look in everybody that you're going to hire, is this a guy that is a doer? Is this a guy that is going to be execute under pressure or something like this? Is this a guy that people are going to rely on him and stuff? It doesn't matter if gender, race, or any sort of thing. If the guy smiles all the time, if the guy has bad humor, if the guy is Homer Simpson, if the guy is Superman, he needs to do all the stuff there. If it's the stuff, you're gonna hire a very good person. And it's easy for a foreigner to understand this than a Brazilian because of the difference of culture. Anglo-Saxon culture understand this better, but Latin, Iberic cultures doesn't understand this too good. You always need to think that you have to run an organization with radical truth and radical transparency. This is not something I invented. This comes from capital markets. This comes from Ray Dalio, these book principles here.
Yeah.
But it makes everyone's life easier in any type of companies. You go to your controller, your treasury, or the leader of all these departments. What is going on? What we need to do? Why are you not doing this stuff? What you're looking here is from radical proof answers and radical transparency feelings and stuff. Because you need to steer the ship to the right or to the left, and you need to rely on them that they are with you together. You need to understand if they are in this military movies from Hollywood. You need to find if I have someone cover your six there, right?
Yeah. Are they gonna get things done? Are they reliable? And especially when you're dealing with volatility, when you're dealing with faster cycles, when you need to react quickly. It's not personal, I think is the idea. It's you just need the information. You need to work together.
When you need to jump on the chopper, you cannot leave anyone behind in the chopper because it doesn't feel well or something like that. And you do not need to go to this point of the career or the situation. You have to address this from the point that you hire and build a team. And building a team is a constant thing that you do because every single company is a pyramid. There's only one controller, one FP&A, one treasurer. People who are moving up, it's not everyone that is going to stay with you over 10 years, over 3 years, right? So you need to prepare constantly the replacement, the substitute, the new person. You always need to work with 2 or 3 leaders, potentially from each area there. Your guys below you have to do the same thing there. Yeah, I always tell to my controllers, I'm working here for almost 5 years. So if you look for my profile, looks like maybe I'm a guy from 5 years average projects here as a CFO, 5, 6 years. Looks like you can be next in line in succession here. Or maybe I'm working there for 2 years and the guy, well, I wish I could have more opportunities, or I wish I can make more dollars here and stuff. And sometimes he is in this salary range that is right with the market and he's aligned and is what the company can pay or can afford at this point in time. And the guy is looking for the next step in his career. And he can get along. He's a great guy and stuff. But sometimes you're going to lose this guy to the team. It's not bad. And it's good when you have the radical truth and transparency. Because he comes to you and say, you know what? I'm working with you guys here at this company. It's a great company. You're a great leader. It's great stuff. I feel that I'm prepared to go to the other company. And by the way, thank you. You taught me, and I learned a lot of good things here. And I like this style. I'm going to do this and that. So this is the big legacy that you're going to have, the biggest reward that you're going to have as being a leader in finance, CFO. Of course, making money is good.
Absolutely.
It's good for everything. It's like, the famous movie there, Show Me the Money.
Yeah.
You need to have a purpose in your life in every single occupation that I have,
Yeah.
in every single role that I have in an organization. So I tell you, when you try to build a team, try to look at this stuff here. Try to look, well, this is a guy who has ambition. Okay, but this is bad. No, this is not bad. Let's see,
How can he be part of the team for now? Yeah.
yeah, how he managed his ambition and stuff. This sort of thing, I think he's going to stay with us for 2 years. There's people that doesn't like someone that is going to come and stay for 2 years. As you figure out and say, well, maybe the company is going to be different in 2 years from now. Maybe we're going to come to an M&A or to a merger or something like this. So having a guy that is going to stay 2 years, 3 years, not that bad. Guy from the other company that usually he does tours like 6 years, 7 years, and then he jumps for the other company. He's expected to do this, and 2 or 3 years from now, he hit the wall because of some situation. You're not doing a good thing for the other guy, right? You need to be smart on doing this.
You've also seen the phases, right? So you know how things can change and building teams that work today are not necessarily the teams that are going to work tomorrow. And so building those capabilities, building that backbench of people that can step up when people leave, all really, really valuable.
And there's another mistake people do with this when they are hiring new people and preparing new leaders and stuff. They look at you, let's say, oh, Isaac is a good controller. Oh, he's never going to be a good FP&A. Why not? Usually, these perceptions come from people outside of finance, right? Sometimes they create labels for your guys in your team and stuff. Oh no, because he always say no for me, or he always give me strict rules to book this stuff, this revenue, or to book this contract and stuff like this. It's the lack of understanding of the function of the guy. His function is to do this. His function is to fire the missile. He's not the guy who goes to the other place with small guns and stuff.
Doesn't mean he's not capable of it. It's just the function that he's in. Yeah.
That's right. What is important is it's like soccer or any other sports. You have to learn with somebody that plays better than you.
Yeah.
And all these guys that you hiring, maybe they learn how to play with somebody better than him. Maybe if they play in the stadium of their adversaries there, they have the fans of the adversaries, they have the pressure, they are in a different environment stuff. If they succeed there,
Yeah.
they're good guys, they're gonna do other stuff there. So otherwise, people are gonna be doing their entire life the same thing. It doesn't make sense, right? You need growth and you need to train and you need to identify people that can be able to do that stuff. You have to create a blend.
Yeah.
People who's eager to be developed for people who has ambitions and even for people that doesn't want to have.
This was all really great stuff. It's nice to hear your philosophy on team building and how it comes together because I think that you're right. There's people that have different needs and different stages of their life and different stages of their career. And it all comes together to build that team that makes sense and that fits the moment of the company, right? Because that's the other piece is the moment of the company changes with each phase and with each step. And like we said, you've covered and seen a lot of different phases in a lot of different sectors.
And you have to think about one thing that I mentioned in the beginning, the difference of
Yeah.
cultures, right? Anglo-Saxon and Latin, Portuguese, Iberic cultures. If you need to think that all the stuff that we talk about, you have this thing of the culture that goes in every single pillar vertical that you're talking here, right?
Yeah.
That permeate this entire discussion that a foreign person need to understand. People here in this culture, it's more like emotional.
Yeah.
It's more like people tend to say, oh, they are more human comparing to the Anglo-Saxon because they are more cold, they are more straightforward, straight to the point, whatever. And people here is more comfortable, it's more relaxed, or it's more friendly. You're talking about business here first. And when you're talking about business, you have to be careful because not necessarily the person that is friendly, that is calm, is relaxed, more human, it's going to be the reliable person that you're going to count. Sometimes they're not going to tell you the truth when you give them the feedback,
Yeah.
not because they are liars and stuff, because they rather say something in an indirect way to you than in a direct way. So sometimes they spend a lot of time going in the indirect way to make sure that you understand something in the way that they not expose themselves, right?
Well, they don't wanna say no to you, right? They don't wanna make you feel bad. They don't wanna look bad.
So they create all sort of imaginary things in their minds that create difficulties for people to understand the situations.
Yeah,
A lot of foreign leaders that I have before I don't talk about bosses, I talk leaders. They say, what is going on? What's the problem there? And I say, well, it's a little bit different. It's not in a good mood or the stuff, but what did I say? You didn't say anything wrong. It's okay. I understand because I had part of my education as an Anglo-Saxon because my father was a foreigner. I understand what's the expression, no hard feelings, right?
yeah,
You can be mad at me at 10 o'clock in the morning and do all the stuff and criticize my job and stuff and said, you need to be better here and here and here. And then 12 o'clock, that's going to grab some lunch.
yeah.
And then go in and talk about other things, talking about soccer stuff. I know that you're a Jets fan, so I'm not going to talk about football because,
They're terrible. They're so bad. But we have the Knicks. They're good.
yeah. And I learned that you became Vasco here in Brazil, which is worst.
Still debating, but they have a pretty
Yeah.
shirt,
Still
as long
debate.
as I'm not Flamengo.
Back to the thing. That's the difference that a foreign person need to understand. And this is really tough. This is really tough.
Yeah, I had a call earlier this week with a Dutch person, and they were very direct, and I loved it. It was great. It took me a second, and I was like, "Okay, I like this guy. He was straight to the point. What is going on?" It was a great call. And then I just walked away. It was a very Dutch, but it was great. You've touched a lot on some of these questions, but what is it that foreign CFOs, you talked about some of your bosses asking, what is going on with this? But what do multinational companies, people in a regional office that's managing the Brazil team, that's working with the Brazil operations, or a foreign investor that's working with an investment here in Brazil, what do they struggle with? I think you touched on some of these things, right? So the culture, the indirect culture, the tax system, but what are some of the things that they struggle with? And what is the type of support and consulting that you find yourself needing to provide?
When you talk to your CFO overseas, in a multinational company, or even if you are managed by a private equity or something like
Mhm.
this, right, overseas, you mentioned the first two things, right? The problem was the culture. You mentioned the problem was the taxes there. Of course, you have another layer that is the accounting, because you operate in two sets of accounting regimes, right? You operate in the traditional US GAAP, right? And you operate in the IFRS. In the past, it's more complicated. 20 years later, I can tell you that it's easier to do this because a lot of the things that we have in the IFRS are the same that we have in US GAAP here. We do have a lot of difference, but not as much as we had in the past year. So you have to explain this, and sometimes it's a little bit complicated when you do the translation of your balance sheet or income statements there. For instance, you are a CFO here and you deal with your CEO, right? You set the goals, you set the forecast and stuff, and a month later you have to report your results to the CFO there. And the guy comes to you and say, "Oh, Frank, that's good. I see that I have good results here, but we're supposed to deliver X in sales and we deliver X minus five. We're supposed to have a margin of W plus half percent, and we had W plus 0.3%. So what happened? Because we're supposed to deliver all the stats here, you and the CEO and the stuff." And he said, "Yeah. And by the way, you only had this in your worst case scenario." Yeah. So I reached a target on the worst case scenario, because the worst case scenario most of the time in Brazil is not the worst case scenario.
Yeah.
Usually it's pretty much like the base case and stuff. And what you have here, it's a funny situation that you're going to see a lot in multinational companies. And it's probably about the culture. A lot of guys is going to try to kill me after I tell you this. They set the expectations of their bosses overseas either too low or either too high. It depends on the stage that they are in the company.
Right.
If they are in sort of the Captain Hook ship going to the crocodile, they set the expectations high. They don't want to lose the job that week or that month or that quarter.
Right.
So they put stuff there, and I'm gonna figure out the next month how to explain this. And of course, when the bad results come, it comes the time that they need to push the card to find the VPB. You know what is a VPB? Is the vice president to be blamed with, right?
Okay.
They look the entire organizations, the operations, the IT, or the guy there. Oh, it was something like this. So they are always buying time, doing stuff like that. This is one type of personality that you have.
Yeah.
I believe you have a lot of guys that do this stuff, particularly the guys that focus more on the short term. They try to get the bonus as fast as they want and stuff.
Yeah.
So every single thing that they do is because of this. Even when you have tax benefits there, oh, the tax benefits was, my idea and other stuff, or, it's something that you have all the time. I heard CEOs telling this to people overseas. Oh, tax benefits, tax credits, we have this all the time. And that's not true, because in Brazil, usually you have more tax contingencies than real good contingency
Mhm.
assets there. But I heard these people saying this in a room full of people that said, "Oh my God, this is one of the biggest lies that I ever heard here. How am I gonna circumvent this and explain to the guy here in the back channel later? And you need to build a back channel." So
Yeah.
that's another problem that you have. So you need to operate the back channel to explain. Otherwise, you're gonna be in a very bad position there, because you have your fiduciary responsibility, and it is with the shareholders, right? So I have to tell the truth because they're gonna lose the money. You can lose the job, but you don't want for them to lose the money. Or you have other CEOs that do the opposite thing, right?
Set low expectations.
Set low expectations, and then when they deliver the thing, oh, we did a great job. I did this, I did that. And of course, they are pushing the bonus to the accelerators point and higher stuff. And the funny thing, you never had this guy that over delivered by 1%, 2%. You have a portion of them that do
Mm.
this. They're just normal. You have guys that do 5%, 10% more. We try. But this does not happen quite often or too much when you talk about Brazilian companies, because under the same culture, the guy have an eye for this,
Okay.
and you say, "Ah, you're lying to me here. Oh, it's going to be difficult. Okay, that'll be difficult. You're going to need to deliver 3% more. Or the guy make a result 10% or 15% of the result was a tax situation benefit for him. Oh, I did good. It didn't because operational is your responsibility. You are underwater 15%.
Hmm.
You only got to the 100% because something that is never even related to you. Oh, it was related to me 2, 3 years ago. Yeah, 2, 3 years ago, you're not here. So that tax situation was related to another guy, another manager there.
Yeah.
Multiple situations. This is something that happens, and that's what makes, at the end of the day, the life of a CFO that is looking for international company on behalf of a U.S. subsidiary, European subsidiary, deals because he has a boss here and he needs to interact, have a good relationship, to be a partner of this guy.
Yeah.
And it's not a small number.
Understood. You're building bridges, right? And back channeling, like you said, and trying to come back to some of the other points that you made around the need for transparency and fiduciary responsibility and maintaining that and helping the foreign companies or foreign investors understand what's going on the ground, right? Like you said, it's harder to pull these tricks when you're working with people that come from the same environment because they're aware of what you're doing and they've seen it before. For somebody that's not here for it to be one division in a larger regional division, it can be easier to pull these types of tricks if you don't have the right person watching and the right person helping. Frank, it has been a really great time chatting. We're going very long here, and I want to be cognizant of your time because I know you're a busy man. So I always like to ask my guests at the end of the conversation, and we talked a little bit about this at the beginning. What does the expression Brazil is not for beginners mean to you?
We're going to have funny things here. You have an expression in Portuguese that a couple of expressions. Deixa comigo.
Okay.
When somebody says, deixa comigo,
So direct translation is leave it with me, right? So leave it with me.
yeah, make sure that you're not delegating anything. You are, in a sort of way, putting yourself at risk. You have to monitor the person that you live with me.
Trust but verify.
Yeah, because sometimes people say to please you, and then they procrastinate of doing the solutions, or they want to just to please you. Or it's not that you cannot rely on them, but one thing is you tell them something and they answer you, eu vou fazer isso, vou resolver esse problema.
Right. I'll take care of this. I'll handle the problem.
You have other expression when you're dealing with vendors or relationships that you have with banks or you're doing business of other person when they say, a gente se mantém em contato.
We'll stay in touch. Yeah, yeah.
You're gonna keep in touch. The guy's never gonna answer you in 2 years. And when he meets you in a sort of summit or any other thing, sometimes the guy give you the same business card. Oh, no, sometimes they even don't recognize you.
Okay.
Or they mess you up with somebody else, or
I'm used to the vamos marcar, and then they never call you. You never see them.
vamos marcar. And there's one last expression that you see. There's this difference here, create a very bad situation for you, feel very bad, and people doesn't understand. Is the veja bem. You're talking about a situation, and somebody comes to you and say, veja bem.
Yeah,
Veja bem means that there's a guy with a gun in the back of your head.
yeah. Listen here.
Listen here, I was trying to do the thing. I said, deixa comigo, and we're going to see you soon. For some reason, everything derailed. And the tax auditor is here at the door. And he wanted to talk to you because he's going to impeach your, your assets or anything like that
Yeah,
as an individual, not as a company. Right. So when you hear this expression, veja bem, you're gonna have bad news and really bad news, or some lame excuse for something that went bad.
Yeah, I feel like when you hear Veja Bing, it's like time to take a deep breath. It's like, all right, something bad is coming when somebody says that. Veja Bing. So,
Veja bem.
yeah, like I said, I ask, what does the expression Brazil is not for beginners mean? And then I like to ask about the other expressions. And you've answered both questions at the same time because I think that those really illustrate why Brazil is challenging. And like you said at the beginning, it's a big market and lots of opportunities and lots of great professionals, but lots of challenges as well.
Exactly.
Frank, this was really great. I really appreciate you coming on. We talked about this for a while and weren't able to get it done. And maybe better now. I think at the beginning when I asked you to come on, it was probably just my mom listening. Now my mom and my dad listening. So a couple people will actually hear your voice. But before we go, how can people reach you? So if somebody's interested in learning more about your background or interested in the CFO as a service solutions that you provide, how can somebody reach you? How can somebody find you?
Yeah, I think the best way, the easiest way is to look for my profile LinkedIn there. It's Frank Wundheiler.
Great.
People can send me an inbox there. I can talk. I have my cell phone there. Usually I answer less than 24 hours there. And you also have other podcasts that I did recently. This one was in Portuguese. It's about leadership and finance. I think it's out there.
I did.
And you can understand a little bit more about my entire career, the places that I work. Maybe you're going to have some connection with some persons that are in my connection list there. And I'll be pleased to talk, even if you're talking about, oh, can I have a coffee here for mentoring 30 minutes? I have the situation. I saw your podcast interview there. Okay, let's do it. If I have time, why not? I like to help people.
Excellent. Frank, thank you so much. I really appreciate it. It was great chatting. And everybody reach out to Frank. He's full of knowledge and wisdom on this topic and hopefully can be a help. So thanks so much for listening.
Okay, thank you.
Thanks again for joining us. This podcast was hosted by me, Isaac Matzner. It was produced and edited by Maria Filmes. You can find more episodes on Spotify, Apple Podcast, and YouTube, as well as on our Substack page. We do love feedback, so please feel free to reach out to us on social media or via email at Brazil, the number 4, beginners@gmail.com.